Hello everyone, how are you all? I hope you are all doing very well. In today's video, I am going to use a very interesting concept. Tell me, does this ever happen to you? You enter a trade in a certain direction and then the price starts moving downward. If you try to go short for the downward move, it suddenly goes upward. So what's the mistake here? See, the fault is not in your strategy, nor is it your personal fault. The problem is that the market here is trapping you. And you unfortunately get caught in that deceptive trap, completely unable to recognize it in the moment. That is precisely why you end up losing your position there. Okay, if you truly understand the mechanics of this trap, you will be able to grasp the sheer cunning of the market because the market constantly traps beginners. But the smart traders here, those who are highly advanced or very experienced, they deeply understand these complex traps and know exactly how to get out of them safely. There is a risk of loss involved. The information provided in this video is for educational purposes only. I am not a financial advisor. Trade at your own risk. So, in today's video, I am going to explain in detail a topic from the smart money concept, which is called FVG, fair value gap. Okay, now along with the fair value gap, there are a few things we need to look at here, such as candlestick psychology. What is the psychology of the candle indicating? Is the market grabbing the liquidity of the previous candle or not? From this, we can determine whether the next candle that is about to form will be an extremely seller-dominated candle, or in other words, whether a red candle will form or a green candle will form, okay? And here, there are small pullbacks. Sometimes there are fake pullbacks, and sometimes there are true pullbacks. So, what is the difference between the two? That is what I am going to explain in today's video. By combining all three of these things, a very good strategy can be formed here. We already use this in Forex, but if we use it in binary as well, it can yield quite a good profit. Okay guys, this is the method I personally use for trading, and that's exactly what I'm going to explain to you today. After this, you won't even need anyone's signals. You'll be able to do it yourself. So what do you need to do first? You need to look for 3 consecutive candles, whether they are 3 green candles in a row or 3 red ones. Okay, after that, we'll take a rectangular box here. What do we do with it? For the first candle, take its lower wick, and the last one, the third candle. You have to skip the middle candle. Do it like this on this side, okay? See, for the first candle, we took its lower wick, and for the last candle, the third one, we took its upper wick. We ignored the middle candle, you understand, right? The lower candle's upper wick and the upper candle's lower wick. And I can also place the rectangle on the upper side here because an order block is formed here. I will explain the concept of order block later. Here, I have marked it for downward movement because, look here, right now I am explaining the fair value gap in detail. If I also add the order block here, you might get confused and both concepts will get mixed up. That's why there will be separate videos so that you can understand them properly. It also takes time for the mind to process. Like today, whatever knowledge you have gained, you will first absorb it, understand how the fair value gap works and how it can be applied. If I add the order block here as well, you will get confused. So did you understand here? For the fair value gap, I observed 3 consecutive candles. For the lowest candle, which was the first candle, I considered the wick on its upper side. And I ignored the second one, and considering the lower side of the third candle, I placed the label here. Now what will happen? What is the benefit of this? The market usually reacts only after testing this fair value gap zone. Okay, now since there is resistance on the upper side, the market will come down to this zone that I have created, the fair value gap, and will test it. The market will definitely tap this area once and maybe it could turn bullish or there could even be a breakout. Those are later scenarios, so by taking advantage of this, we can place our trades here. Okay, if you have been trading based on support and resistance until now, that means your style is quite old. Now the generation has changed a bit, so move towards smart work. That's why we are using the smart money concept, and here you will be able to see very clearly how well we can make profits. Okay, so on the downside, the fair value gap zone that I have created, at least the market will tap that area. I hope you have understood this concept. I will find more charts like this so that you can see how it works on different charts. How can we avoid this trap here? Because if I explain it using just one chart, you might not fully understand since all of you are different people and will see different charts. You need to look at 3 consecutive candles and create the gap according to the wick. Now just use your own logic. Here, these are 3 consecutive candles, the previous candle's lower wick. So here, I don't think a gap can be formed. And it's not like it always forms. In many places, we can't create that gap. So what should we do here? We need to change the chart and look for such opportunities. It might take a little time, but if we put in the time and then enter with discipline, it can turn out really well, right? And we can also make a profit. And here too, look, I can see 3 consecutive candles, but first I'll remove this. For the horizontal levels, I'll use a rectangle. What you have to do is take the lower wick of the top candle and the upper wick of the bottom candle and neglect the middle candle. Like this, see, a gap has formed here. Now, since the market is moving below this and it's in a downtrend, we can't consider anything here. That is, we can't place a trade here. For now, I'm just explaining to you how we set this up. Once you understand this, you'll be able to use it on your own chart and confirm where to take a trade. Okay, so here I will take a horizontal line and place this horizontal line below as well because, see, support and resistance are very important. You should definitely know about them. After that, here I can see 3 consecutive candles, but there is no wick here, so it might not form, but we will try, okay? So I looked at the upper side. In this way, I placed the wick on the lower side, and I am considering this particular candle. I have placed it here, and here it has formed quite nicely. Now, as soon as the market tests the support level, there could be a bullish movement from here. So here I can take a trade for an upward direction because see where I have placed the trade, the previous candle is there. It's not green, but it is giving an indication that the market could turn bullish from here. The second thing is that the red candle that formed here, this green candle has completely grabbed its liquidity. The market went down first and then it pumped up from here. In the market, we call this a true pullback, okay? If you see the market behaving like this anywhere, then this kind of pullback is considered true. Sometimes there are also false pullbacks, so you should not be overconfident in those situations. Hope you're able to understand some of these things. If you have any doubts about what I'm saying, you can let me know and maybe I'll reply to you in the comments or clear your doubts in the next video. But if you watch the video 2 or 3 times in a row, all your doubts will be cleared. Okay, just make sure to watch the video carefully. If you don't have time right now, you can like the video and save it. Later, when you watch it with a calm mind, all your doubts will be cleared. Okay, so guys, look, finally my trade here has become profitable and the fair value gap that I had marked has also been broken. You can see how good our ITM trade was here in the market. If you learn all these things, just think about how well you'll be able to do trading here, right? So here again, I will change the chart and once more point out a chart with a good movement so that you have no doubts left. I will show you lots of examples, okay? If you want to watch, go ahead and watch. The rest, those who really want to learn, who are truly dedicated to themselves, they have to learn anyway. Now look at the lower side, you will see 3 candles in a row here. Red, 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 okay? And the lower wick of the first candle and the upper wick of the third candle and the lower wick. This forms the fair value, right? Here, a red candle will come to retest. Right now, the market will come down a little here to test, and only after that can the market turn bullish from here. Okay, so here I can address the downward movement. I have already advertised for the onward movement. At least the market movement will definitely reach this zone. Okay, and look, the second thing is that a resistance level has also been set on the upper side here. The wick you see is almost the same. On the upper side, meaning the red candle that has formed, it has grabbed all the liquidity of the previous green candle. It means that all the buyers who were there, the red candle went and grabbed them all, and after that, the market moved downward. So from here, we get confirmation that first, the fair value gap concept is being applied, and second, the liquidity concept is also at play here. That's why I have taken a trade for the downward movement here, okay? Look, you can never be 100% sure here. This is binary trading, but if we do this in Forex, we trade according to a larger time frame, and there, the chances of being profitable are quite high. However, here, since we are working with the 1-minute time frame, maybe it doesn't always work like it didn't just now. The market will still move down from here, but picking a particular candle can be a bit difficult, as you all know. But I'm explaining the concept to you, how we can use it in different ways. Now, many people might be thinking that I usually train in Forex, but here this is the pocket option platform. But you could say that the platform doesn't really matter. The concept here remains the same. The chart is the same, right? The candlesticks are the same, aren't they? Green candles, red candles, they're here as well as there, right? The main focus should be on our concept because what are you understanding in Quotex? Are you not supposed to do anything there? You have to place trades directly, but even there you have to use your mind, right? In the same way, you have to use your mind there too. So my main motive is to teach you the reality. I want to teach you how we can make a profit in trading, what concepts can be used. That's what I want to teach you. As for which broker you use, that's your personal choice. Okay, guys, so finally, my trade here has turned out to be profitable. You can see that the resistance I marked above and the fair value gap have now both been fulfilled. Just a single candle covered it completely. Such a strong solid red candle appeared here. Okay, and at this point, it's possible that you might see a bounce back or even a breakout. But as far as our objective was concerned, we got a good trade. We placed it. Okay, let's move on. Now I will open more charts here and try to show you some good examples so that by the end of the video you have no doubts left regarding the fair value gap, okay? But here, three consecutive candles have formed. So here I will try my best to create a fair value gap here. If it forms, then so here I have taken a rectangle, and it's for the topmost candle I have considered the lower side wick, and for the bottom candle I have considered the upper side wick. Okay, now if you look at it yourself, according to this, the market has come down from here. Okay, then it went up a bit and again came down. So it has respected this area very well. You can see how nicely a downtrend is visible here. If we use this on the 5-minute or 50-minute time frame, it will work really well. So here I will just copy this rectangle. There is also a resistance on the upper side here, which is here, because you should never rely entirely on just one concept. Here, this is an order block. Let me explain a bit about order blocks. We consider the last selling candle and the last buying candle. That's where the order block is formed. And based on that, we have to look at the liquidity of the previous candle. Then we can decide what kind of candle might form there. In the next video, I will explain the details to you. The video might be a bit long, so please compromise on that, but there will be no compromise when it comes to the concept. Alright, so here I will take a rectangular box, and I am trying to find a good fair value gap here. So try to observe this. Three consecutive candles have formed here. Alright, okay. And after that, I feel like on the lower side here, maybe it won't be able to form here. No, I won't be able to find it here, so I'll change the chart here and look for another chart. So anyway, if you want to try, I'll give it one more shot. So, look at the lower side. I considered this wick that just formed, the one that has just appeared, and the three big candles that are forming right now. According to them, it's fine. Here, the fair value gap has formed. Okay, you understood, right, how we do this? You have to look at three consecutive candles, both above the first candle and below the upper candle, and you have to create a gap. And I have copied this. Here, to set resistance, what is resistance? Order block. Meaning in this way, the market keeps retesting it again and again and then comes down. And here I have tested the trade for a downward move. Okay, guys, there is resistance on the upper side. First, you can see multiple rejections. In the green candle, under the red candle, the market was trying to go up but couldn't. Why? Because there were sellers there. Second thing, here's the concept of the fair value gap, because the market, the market will definitely come to tap that level. Even if there is only one red candle formed there, it will definitely form. Only then will it be able to respect that level. And this is a very good concept of the smart money concept. The fair value gap is a very good concept within the smart money concept, which smart traders use a lot. It works very well for them. The strategy. So that's exactly what I'm explaining. You can see how nicely the red candles are forming, right? Okay, so look at how deep this wick is. It's important to understand it this way. Don't depend on anyone else. Why should you take a trade? You have to learn for yourself and do your own training. All right, so finally, my trade here has turned out to be profitable. Okay, guys, I hope you have understood at least a little bit about how we find fair value gaps and how we understand the psychology of candlesticks. When these two things are combined, something really great comes out of it. If you don't understand the video, please leave a comment. Watch the video 2 or 3 times and all your doubts will be cleared. I know this because I have explained it very well, but you will definitely see 3 consecutive candles here. Now, if I try to create a fair value gap here, see, if the wicks are very long, then a gap can't be formed. If a gap does form, it's just a very small minor one, so it won't work there. So if I try to create one here, it still won't work because the lower wick of the first candle and the third candle are almost at the same level. So here, I'll try changing the chart and see. So right here, I can clearly see this specific chart. So I'll use a large rectangle box right here because I can very clearly see 3 distinct candles. I'll do my absolute best to make it work perfectly there. I've also carefully marked the wick on the lower side. Okay, but it won't work here because the lower side is also going upward. So I'll try changing the chart here. Maybe I'll get a better opportunity here now, but it's not necessary to take a trade. Understanding is important. First, you should understand. You'll keep taking trades according to your own strategy. But just to clarify the concept, here you can see 3 candles. But I'm looking at what's different here. What value can be created? I've sold below the upper candle, alright? And I'll extend this a bit lower. This is the upper side of the weekly candle. Okay, so look, it's formed here, but it's formed very small. Now, what could happen here? If the market gets trapped here, actually, it already has been trapped. Now, from here, the market could turn bullish. How long will it stay bullish? Until it reaches its resistance above. But sometimes we call it resistance. Actually, we call it resistance when the market keeps testing that level and coming down from there repeatedly. And we call it an order block when we consider the last buying candle, and that's where an order block is formed. All right, so here, the market can remain bullish from here. And we can also place a trade here for an award. If you want, you can, but we won't do it because we're still learning. All right, I'll try to show you more examples because you shouldn't have any doubts left. What is fair value after watching this video? All right. So do you see 3 consecutive candles here? Just 3 consecutive candles. I can see them. Actually, I do see 3 candles here, but I feel like maybe we won't get a fair value gap here because the wicks are quite long. Still, I'll definitely give it a try. So here I'll sell on the lower side of this. Okay. And here I can't really form a wick. How will I take the wick of the third candle? It's almost disappeared. There's no gap at all. So a line is forming instead, which means it won't work here. So I'll change the chart and check. I'm looking at Euro NZD now. Maybe here, maybe there's a possibility. But even here, I don't see any such candles. See, for fair value gap and these smart concepts, you have to find the right charts because opportunities don't always appear everywhere for us to trade. Beginners often make this mistake. I don't know why, but they feel like they have to take a trade on every candle. They think every candle should move according to them, but how is that possible? It's not, that's impossible. You have to find it here. We need to move according to the market. If we're not moving according to the market, that's not right, is it? So the market won't move according to us. That's what I meant to say. Now I'm changing the chart here and trying to see if I can spot 3 candles, but I can't see them. Even if I do see them, there's no wick there. So it won't work in that case. It might take a little time, but that's okay. We'll take our time, but we will definitely learn. So can you see 3 candles here? No, right? All right, I'll change the chart. Then we'll see them. And here in USD, BTT, maybe not. Wait, yes, I can see them. Look, I can see 3 candles here. And now I'll take a rectangle box and place this rectangle box here. Look, try to observe very carefully. Maybe you'll notice something, the upper wick and the lower wick, meaning I've considered the lower wick of the upper candle and I've neglected the middle one. For the lower one, the long wick, I've considered the upper wick of the third candle. You understand, right? So here the market has done a bit of a retest. Look, a green candle has formed and the market is currently in a breakout. The market will remain downward from here. I can draw a horizontal line here, right here, because previously the market turned bullish from 2 points. So this forms a good concept. We can call this an M pattern. First, an M pattern formed, and now here, this could become a double pattern. Okay, so you also need to pay attention to M patterns and W patterns. If we are using something like this, then it's fine. Now, according to today's trade history, if I look here today, there are 5 dead places, actually 6, out of which I had only 1 loss. And all the rest of my trades here have been profitable. The trades I took were based on the fair value gap, and they turned out to be deep wins for me here. Isn't that right? If you want to learn, you can study this in detail, watch the video 4, 5, even 10 times, then try applying it on your own chart, and you'll experience a real sense of satisfaction. I mean, you'll realize that this actually works, so try it first and then let me know in the comment box whether it worked for you or not. Here, the market was previously bullish, so there's a high chance that the market could remain bullish from here. But if the market tests the fair value gap, then it could be confirmed that the market can move upward from here. But I will change the chart here and see if there are any more examples to show you. Placing trades is not as important as learning, because once you learn, you can grow according to your own preferences and your own money management. I will also bring a video on money management because you don't even know what you need to do, how much amount you should start with. People just think that whatever money they have, they should use it all, but that's not how it should be. If you really want to become profitable and stay profitable, there is a difference between the two, being profitable just once or staying profitable always. And if you have limited funds, what will you do in that case? I will tell you what you need to do. All you have to do is comment in the comment box if you want a video on money management. Just leave a comment, nothing else. Now on the upper side, I saw 3 consecutive candles. So here, if I draw a rectangle box, maybe a farewell gap could form here. Anyway, I am trying. Look. Did you consider the wick on the side below the topmost candle or the lower wick of the bottom one? No, it wasn't considered here, not on those yar. Not here, it won't form. All right, no problem. Because sometimes you don't always get such opportunities. Here, I have taken a trade for an upward move. Why did I do it? Just because of these two candles that formed, right? After that, a green candle formed, but that green candle did not cover those two candles. It didn't engulf them. That means buyers are still active here. The market could remain bullish from here because, look, the support and resistance concept is kind of old now. But if we look at liquidity here, then the last two, even by looking at just these two candles, we can make a decision here what could happen. Now, this red candle here, if it goes all the way down, if it covers both candles, if the red candle engulfs both green candles, then I would decide that I need to go with the sellers here. But how did I decide that I should waste a trade on the green candle because it couldn't cover it? That means there are fewer sellers, right? That's exactly why it couldn't do it. Because of this, the market movement can remain bullish. That's why I placed a trade here for the green candle, and finally this trade has become profitable here. Okay? If you have any doubts in the video about any trade or any concept, just let me know in the comment box. Otherwise, it's a really good concept. Watch this video multiple times, make notes on how we can use the fair value gap. And as for the liquidity part that I mentioned briefly, I haven't explained it in detail here. I just pointed it out wherever I saw it happening. Basically, pullbacks are considered based on liquidity. Where there is no liquidity grab, the pullbacks turn out to be false. And where there is a liquidity grab, that's where true pullbacks occur. I wouldn't say there are a lot of such patterns. There are about 4 to 5 important patterns that form frequently in the market, so you definitely need to know them. I'll discuss a lot more in upcoming videos. I'll bring a separate concept on liquidity. And yes, there are many other things used, like the W, bed, and M patterns, and what the market structure is. Understanding the overall market structure, for example, when we look at a 5 minute chart, it's different from a 1 minute chart, right? On the 5 minute chart, each candle represents 5 minutes, while on the 1 minute chart, each candle represents 1 minute. So for one candle on the 5 minute chart, there will be five candles on the 1 minute chart. This is part of market structure, and I will cover this in upcoming videos. If you want a detailed explanation on this, what will you do in the comment box? You will comment, right? But you already know what you need to comment, what text you have to write, right? So, guys, that's it for today's video. If you like the video, make sure to give it a like. If you're here for the first time, definitely subscribe to the channel. If you want more detailed videos like this, press the bell icon too so you don't miss any upcoming videos. That's why you'll need to press the bell icon. If you're a beginner, you absolutely have to do it 100%. All right? So, guys, see you in the next video. Until then, thank you.